So, what is an all in one home loan? An all in one home loan is a checking account fully integrated with a line of credit. Why that is important is because we are so used to an amortized or fixed term mortgage. And what that means is our interest rate is everything. That's why when people call me on the phone, the first question they ask me is, Mike, what is the interest rate? What's the interest rate today? Well, we know that that interest rate is what's really going to dictate the cost of our mortgage. And once we sign on our mortgage, it is kind of set. And that's what we rely on. There's comfort in that payment never changing for us on an amortized or normal loan that we're used to. Whereas the all in one is different. The all in one is a checking account integrated with a line of credit. Well, the line of credit is what we call revolving. And why that's important is when we inject money into our checking account, it immediately gets pushed towards our line of credit, which means our mortgage is reduced by our deposit. The interest calculation then happens that night on that new lower balance and swept away and starts again the next day. So if you have not spent any money, the calculation is low. That goes on each and every day for a full month. So individual calculations are then added up and you pay an interest only payment on the 21st of the following month. So what happens is your line is down here, your interest payment gets made on your line, and therefore your balance goes up a little bit, and therefore your calculation would go up a little bit. Now you're probably thinking, well, I've got to spend money, I have bills and costs to live. Yep, you have full access to every dime that you put into your all in one. It's just not going to sit there in your checking account. It's going to be pushed towards the line of credit. So it's doing something and saving you in the meantime. When you need access to it, it's immediately there on debit card, writing checks or whatever. All the normal stuff that we're used to, it is there and accessible for you. But unlike what we're used to, where money in our checking account does nothing for us, money in our savings account is not doing much for us. It's doing quite a bit for the bank. This is completely different. We put it in here. It's 100% liquid and accessible. But in the meantime, it's giving us a rate of return, which is the savings we're getting in an interest rate calculation. It's a wild concept. There's lots more to go through in it, but that is in a nutshell how the all-in-one works. And because of its mechanism of interest being calculated on a daily basis on something that you are in control of. So it's principally first paying your mortgage instead of interest first, like we're used to. It exponentially pays off your mortgage quicker, all while giving you access to those same funds, which means you have freedom to deploy that into opportunity zones, other ways to earn money or to live life. So that's the concept of the all in one. If you'd like to learn more, I would love to jump on a call and teach you more. Thank you.